Good morning and a warm welcome. Holly Shields here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US market. Well, Wall Street shares rose to record levels on Monday, and European stocks turned higher after the US President Joe Biden picked Jerome Powell to continue as Federal Reserve Chair. A move welcomed as a signal of stability by the global investors. MSCI's broadest index of the Asia-Pacific shares outside of Japan rose 0.28%. Benchmark US indices closed mixed on Monday, November 22nd, as President Biden nominated Jerome Powell as the Federal Reserve Chairman for the second time. The S&P 500 declined 0.32%, and the Dow Jones was up 0.05%, while the Nasdaq Composite was down 0.126%. The small cap Russell 2000 fell 0.50%, and on Monday, speculation over Powell's second term ended after Biden renominated him as the Fed chair. Powell had kept the interest rate intact despite clamors for a hike due to rising inflation. However, most economists, including Powell himself, consider the current high inflation transitionary. In a statement, the White House said Powell provided steady leadership during the unprecedented COVID pandemic, which saw the country's biggest economic downturn in modern history. Then energy, finance and consumer staple segments were the top gainers on the S&P 500 index. Communication and tech stocks were the bottom movers. Then 10 out of 11 sectors on the index remained in the green. The rise in bond yields gave jitters to the tech stocks, and tech-heavy Nasdaq as well closed in the red zone. Nasdaq closed in the red with rising bond yields and a stronger US dollar. Now that said, it's time for a short break, but stay tuned because I'll be right back with more trending market updates.
Are you sick of paying through the roof for a product that doesn't truly suit you? Want to make sure that you get the best deal possible? Then let us help you. At Kalkine, we do the research, run the numbers, and take a look at the true value of the product to make sure that you're informed as a consumer. Whether it be the best streaming service to suit your binge-watching desires, the right broadband and NBN plans to ensure a no buffering experience, saving money with your energy, gas, and mobile plans, or treating yourself with a bit of retail therapy. We will break down all the details about every single deal, what's in it, how much it costs, and whether it's worth it for you. If you want to save money and stay informed, then subscribe to the channel and press the bell icon, as we will be rolling out a stack of content to keep you in the know.
Welcome back to the Global Markets Roundup. In Europe, shares ended flat on Monday as Germany's warning of tighter lockdown restrictions overshadowed gains in telecom. Following a $12 billion proposal from US fund KKR to take Italy's largest phone group private, that is Italia Telecom. The Pan-European Stocks 600 index finished flat after falling earlier in the day when German Chancellor Angela Merkel said Europe's biggest economy needed tighter restrictions to control a wave of COVID-19 infections. London equities remained lost ground after the afternoon trades, riding on the back of Wall Street optimism, with the domestic benchmark index FTSE 100 nearing the psychological mark of 7,300, recovering from a 4-week low recognized last week. The equity markets remained dependent on high consumer spending in the upcoming weeks, with a number of retailers beginning the early Black Friday deals. Equities are still poised to register fresh multi-month highs, staging a comprehensive recovery from the year-to-date lows, with the headline FTSE 100 index looking resilient to breach the mark of 7,500 by the year's end. FTSE 100 surpassing the crucial level will further direct the market index to the round figure mark of 8,000 in the next year, provided businesses and industries continue to increase efficiency, overcoming the widespread operative challenges of faltering supply chains, dearth of raw materials, and semiconductor chips, as well as the inadequacy of human capital, especially in the food and accommodation business. The short staff situation has significantly deteriorated the business potential of operating at a maximum possible scale, even after deploying the highest possible monetary resources at some enterprises, as they are still unable to employ skilled workforce, with the vaccines hovering at record high levels. And recovering from the previous week's lows, the FTSE 100 gained 0.66%. On the other hand, the mid-cap indicator FTSE 250 shrugged in the negative territory on Monday, with the index sliding once again in the terminal deals. The index lost 0.16% after shares of Hochschild Mining collapsed more than 50% on reports of the Peru mining closure. Although the stock recovered partly during the day, but was still trading at 31% lower from the previous closing price. In the East, Japan's Nikkei share average gave up losses to a higher close on Monday as investors bought cheaper stocks, while concerns over the return of COVID-19 restrictions in Europe capped gains. The Nikkei share average ended 0.09% up after losing as much as 0.68% earlier in the session. And Chinese stocks closed higher on Monday, with semiconductors and new energy shares leading the gains as investors cheered the central bank's attempt to strike a balance between economic growth and risk controls. The Shanghai Composite Index gained 0.6%, and the South Korean shares closed on Monday at their highest level in 3 weeks, as chip heavyweights tracked US peers higher amid a brightening outlook for the memory chip demand. The Kospi ended up 1.42%, the highest close since the 2nd of November. And to the Australian market now, well, the ASX 200 index fell 0.6%. A number of listed shares on the index are scheduled to hold their annual general meetings, including Brickworks, Link Administration, Monadelphous Group, and Pro Medicus. Onto the commodities market now, starting with the bond yields, and the 2-year yield stood at 0.59 US%, while Australia's was at 0.63. The 5-year stood at 1.32% in the US compared to 1.37 in Australia, and the 10-year was at 1.63 US%, and Australia's at 1.78, while Germany's is at 0.31%. The US dollar rose 0.49% against a basket of other major currencies. Oil prices rebounded from recent losses on reports that OPEC could be adjusting plans to raise oil production in large consuming countries to release crude from their reserves, or if the coronavirus pandemic deepens demand. Brent crude ended at 1.03%, and WTI finished up 1.07% up as well. Meanwhile, gold prices fell as Powell's nomination drove expectations that the central bank will stay the course on tapering economic support. US gold futures settled 2.4% lower, while the benchmark iron ore futures for January delivery surged 6.2%. Meanwhile, in the crypto space, Bitcoin fell 4.2%, extending its rout after posting its worst week in 2 months last week. Well, that's all for now on the Global Markets Roundup, but keep watching Kalkine TV for many more market updates. Holly Shields signing off.